There's nothing to stop you from creating an infinite number of these stablecoins or altcoins, and it's used by traders in crypto who want to park their crypto money into a US dollar surrogate while they maybe move it to another exchange or they do some other investment. I've been in this Bitcoin since 2010, actually, and there are these 4-year cycles and cycles within the whole growth of Bitcoin where you have wave after wave of newcomers coming into the space, and every single time they make the same mistakes. There's no collective wisdom in Bitcoin. Nobody looks at the previous generation and learns from it. They all make the exact same mistakes. So this is just the cycle repeating itself. It's going to $1 million, $2 million of Bitcoin. And remember that we need Bitcoin. Bitcoin doesn't need us.
Speculators treat stablecoins as safe havens and altcoins as lottery tickets, but both collapse in the end while Bitcoin keeps absorbing capital. That absorption could drive the next major breakout, and $2 million per coin is where it leads. That's the latest message from Bitcoin maximalist and crypto advisor Max Keiser. Bitcoin is no longer a fringe experiment, as global adoption is surging as institutions, treasuries, and even governments start stacking BTC. Companies now own 3.4% of the total supply, pushing demand into territories fiat simply can't contest. And meanwhile, the supply side is locking up as the ancient supply of Bitcoin held by long-term holders now outpaces new issuance, intensifying scarcity. Combine that with unstoppable fiat inflation and endless money printing, and the only viable destination for Bitcoin's price is to skyrocket to figures we've never seen before. Make sure to stick around until the end of the video as Max Keiser explains why every distraction in the market fades away and why Bitcoin's true endgame is a price target of $2 million. Before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, here's Max Keiser with his insightful outlook.
Do you think Trump is aligned with the bad guys, or is he more aligned with the Bitcoiners?
Okay, well, this is now we get into more of a subtlety and nuanced conversation. So in the world of crypto, there's Bitcoin, and then there's everything else, which is centralized to some degree, either absolutely centralized or relatively centralized to Bitcoin. So Donald Trump, his learning curve and his experience in Bitcoin began really just 2 or 3 years ago. And so his learning curve, he's still early on learning about Bitcoin, and he's done something that every Bitcoiner has done. Every single person makes the same mistake when they hear about Bitcoin. Then they get interested in these altcoins, these other coins that are not really Bitcoin, and they're attracted to them. And so he got attracted to doing his own coin, the Trump coin, and that was a colossal failure. It crashed 80 or 90% already. So I think it's just a matter of learning, getting your fingers burned by the stove. I think within hopefully 6 months or a year, he will have gone through that learning process. The terrible twos, toddlers have to go through that terrible twos, right? They touch the stove, they fall down the stairs, right? You can't stop it. That's just human nature. So Trump is going through his terrible twos. He'll learn the lessons. He'll come out of it more knowledgeable and not make these mistakes. But I think at the end of the day, he is a Bitcoiner. He's surrounded by Bitcoiners, and the obvious benefit to the United States to be a Bitcoin powerhouse he sees and will pursue, and that's what will make the United States a beacon of freedom once again, and following in the footsteps of El Salvador, which is we have already arrived there. We are already the shining city on the hill. We are already the beacon of freedom, thanks in large part to President Bukele's embrace of Bitcoin and his policy of to make the country the safest in the world, which is on track to being the safest country in the world in the next 12 months.
So he got another digital token. Which digital token did he have to sell to create this stable coin?
Right. That's exactly what I'm saying. There's no limit to how many of these you can create. You can create ad infinitum. There's nothing to stop you from creating an infinite number of these stablecoins or altcoins, and it all, at the end of the day, it's all inflationary. It just adds a lot of noise to the market. They have no practical purpose, But it's inevitable that people have to go through the same learning curve over and over. I've been in this Bitcoin since 2010, actually. Stacy Herbert first mentioned Bitcoin when it was 30 cents on the Keiser report in 2010. And we've been covering this since 2011. And there are these 4-year cycles and cycles within the whole growth of Bitcoin where you have wave after wave of newcomers coming into the space. And every single time, they make the same mistakes. There's no collective wisdom in Bitcoin. Nobody looks at the previous generation and learns from it. They all make the exact same mistakes. So this is just the cycle repeating itself. Bitcoin, it doesn't care. It's on its own vector. It's going to $1 million, $2 million of Bitcoin. And remember that we need Bitcoin. Bitcoin doesn't need us.
So Trump is creating, like, him and a financial group are creating their own stable coin that's going to be 1-for-1 with the US dollar. That's what a stable coin is?
Okay, just to repeat, a stable coin, it's a US dollar proxy. It's priced at 1. And they say it's priced at $1.
Yeah.
And it's backed in many times by a US Treasury bill. So it is in fact a US dollar proxy. Any private company now, municipality, corporation, can just issue dollars.
That's wild.
Right? That's the amazing thing. Just like the US government can just issue dollars without any accountability, private companies can just issue US dollar proxies called stablecoins. And they're issuing them by the trillions. And that's what's going on. Now, in my view, it's inflationary, and that's why purchasing power of the US dollar is going down. And it's why I think there'll be a counteroffensive from countries like Russia and China to issue a gold-backed stable coin. Okay, that'll be a conflict. That's where the true conflict is heading. But right now, anybody can issue. A private company can issue a U.S. dollar stable coin, and it's just exactly the same as issuing dollars. It has the exact same impact on the market.
Well, it says here that the stable coins that are pegged to the dollar, such as Tether and USDC, have ballooned in recent years.
Yes, that's right. Tether is now worth $142 billion. When I first was there when Tether was born in 2012, it might have had $3 or $4 million in it. It now has $142 billion, and those $142 billion notional value Tether is held with $142 billion of U.S. Treasury bills over at Cantor Fitzgerald. Cantor Fitzgerald supplies the Treasury bills that back U.S. Tether's $142 billion that backs their stablecoin that they issued privately.
And so, go ahead.
Yeah, and it's used as a dollar is in the world market. So in places that don't have dollars and don't have banks, they use a U.S. dollar surrogate. So what you hear in Washington, Jimmy, is that the global economy and the geopolitics of the 21st century, in large part, is determined by whose currency people use the most. And the U.S. dollar wants to be the winner. So they are promoting as many of these stable coins to be created as possible because they're all using U.S. Treasury bonds to back them. So it gives demand for U.S. Treasury notes. And what is that? Why is that a good idea? Because that means that the U.S. debt at 35, 36, 37 trillion, in order to finance that debt, they have to sell bonds. So that means that all these stablecoin buyers are helping to fuel demand for Treasury bills, which are supporting the U.S. debt. Now, if you ask me, is this a good idea? I would say, no, I don't think it's a good idea because I call stablecoins kind of a hospice for the U.S. dollar. The U.S. dollar is deeply troubled, and we should get rid of it and do something completely different, like introducing a Bitcoin standard. Stablecoins merely prolong the life of a walking dead currency called the U.S. dollar. That's my opinion, Max Keiser. And so it's just prolonging the inevitable. They will not stop the U.S. dollar going to zero against Bitcoin, right? Bitcoin is going to be the world reserve currency. The U.S. dollar, and people in Washington think they can stave that reality off by issuing trillions of these stable coins. I don't think it's going to work. I could be wrong. Of course, I'm not always right, Jimmy. But in my view, it's just prolonging the inevitable.
Well, you've been right for about 15 years. So I think that's you have a very valuable opinion on this. So someone in the United States wouldn't buy a stable coin. There'd be someone in South America or Central America, places where people don't have access to U.S. dollars. They're the ones who would want to buy a stable coin.
That's the biggest market, yes.
Okay, all right. So now I'm very slow to catch on, Max. I appreciate your patience with me.
No problem. But you understand that the U.S. wants to have as many people in these countries trading dollars as possible. It's like the U.S. dollar to the United States is like the Nike sneaker is to the Nike Corporation.
Right.
It's our brand. It's our product. It's how we influence the world is by getting people to use U.S. dollars. That's the America.
Max Keiser believes Bitcoin is not a gamble, but the asset that sucks gravity on capital. Right now, institutional adoption is accelerating. Global Bitcoin ETFs hold about $179.5 billion in assets under management, with US ETFs leading this acceleration. Corporate treasuries are stacking too, as institutional Bitcoin holdings have surged to 1.86 million BTC, up over 50% year over year. Combine that with the tightening supply curve from halvings and less liquid supply sitting idle in long-term hands, and the forces point in one direction. Keiser argues that these signs suggest Bitcoin could break through every ceiling and it reaches $2 million per coin.
So there's three things, actually. There's the US dollar, there's what's called a stablecoin, and then there's the CBDC, central bank digital currency. So they're all similar but different in subtle ways. So let's start with stablecoins. Stablecoins came around in 2012, and it's a digital token that's launched online that calls itself a US dollar surrogate. And it's used by traders in crypto who want to park their crypto money into a US dollar surrogate while they maybe move it to another exchange or they do some other investment. So it's a virtual dollar. And then within a few years, the people who were creating these virtual dollars started to buy US treasuries. The biggest of this is Tether. So Tether is a $142 billion virtual US dollar. It's backed by US treasuries. And it is essentially, you could say, identical to the US dollar. So the US dollar is really printed out of thin air, and there's no limit to how many US dollars can be printed. And people use it as currency, as a medium of exchange. And of course, when you print too many of those, it can cause a lot of inflation. A virtual dollar or a stable coin is printed by private companies, not a government, but a private company just prints an unlimited number of digital tokens that they call US dollar surrogates. And they buy US treasuries to quote unquote back their tokens. But of course, those treasuries are also printed out of thin air. So it's thin air backed by thin air, you could say, when you compare it to something like Bitcoin. Now, let's talk about a central bank digital currency. This is something different, and you see this happening in Europe. You see the leaders in Europe are really keen to launch a CBDC, as they are in Asia, as they are in China. And they want to absolutely control the monetary system so that every transaction is monitored centrally by a central authority. And they have the ability to censor any transaction and to introduce credit scores or social credit scores. If you spit on the sidewalk, you'd get a demerit, and this would impact your social credit score and therefore access to these digital dollars. So central bank digital currencies are definitely centralized surveillance financial technology. Stable coins are also centralized. They are not necessarily in the same catalog as a CBDC. People in the global south, for example, who have no bank account at all or no access to US dollars at all, they can, on their phone with an app, essentially trade with US dollars with other people around the world who want to just trade with US dollars because it's the most common currency denominator in the world. People are very familiar with dollars. So there is an application for stable coins. They have a practical role in countries and populations that have no access to bank accounts and certainly no access to US dollars. And then, of course, there's the US dollar itself, which is really a virtual currency. There's nothing really backs the US dollar. Banks don't have any reserves in a fractional reserve banking system as you have in the United States. Banks have no money in the bank. When you, the way money is created, Jimmy, as I'm sure you are aware, is that when someone comes to the bank to borrow money, it could be, let's say, a mortgage, the bank simply hits a button and creates $500,000 or $1 million worth of dollars out of nothing. There's no money in the bank. They just create it on the spot to create that loan, and then they're making money on the interest on that loan.
So what I was always told as a kid was that they take that money and then they lend it out like a George Bailey kind of a thing. But they're not, that's not what they're doing. What do they do with the money I put in the bank?
Right. They lend it, they immediately put it into the global derivatives market and try to eke out a small percent gain on trillions of dollars to create cash flow for themselves. But there's no actual there. They ostensibly have a minimum reserve requirement as defined by, I think, Basel III, which is de minimis. I think it's less than 3%. But if you actually did an accounting of the books of a major bank like Citibank or JP Morgan or Bank of America, you would find that they have no actual tangible assets or reserves at all. It's negative reserves. They have a negative book value. They do what's called mark to market, not mark to market, but mark to model accounting. So when the regulators go in and say, well, show us your books and show us that you have this money, that what they show them is a model of what would be money if in fact these conditions according to the model existed. It's a theoretical model. But if you were to say, well, show us the actual cash on the balance sheet, they would be unable to do that. It's mark to model, not mark to market. So it's all a huge accounting fraud. Remember during the 2008 scandal, Lehman Brothers was caught doing the Lehman shuffle. It was accounting fraud 105, I think it was called, where when the regulators came in to audit the books, they took all the debts, they stuck it into this account, then the regulators would look at that account, and they stick the debts back in the original account. They play this enormous three-card Monte game with their debts. They collude with each other. All the banks help each other, Lehman or JP Morgan or Goldman Sachs. They all share each other's liabilities one step ahead of the regulators in this massive shell game. I worked on Wall Street for many years, so I have personal experience from how this is done and having participated in these schemes myself for many years. So there is no actual money there. And that's why the deficits are 35, 36, 37 trillion dollars, because at the end of the day, they just keep printing more money, and that creates a greater drag on the economy and the interest on that money. Of course, the interest on America's debt is the single biggest item on the budget in the United States. It's bigger than the military now, and it's growing a lot. And you'd have the Elon Musk is over there in Washington with Howard Lutnick, who I know very well from Wall Street. They're trying to find fraud and waste to cut the deficit. They believe they can find $2 trillion in waste, but it's a $36 trillion problem. So it does, and the bond market's telling us that they won't be successful anytime soon. That's why interest rates continue to creep higher, because of the problem of having runaway debt. And the U.S. economy and the global economy goes into what's called a debt spiral, where no matter what you do, you can't pay the interest on the debt. So it begins to feed on itself. You can't even afford to pay the interest on the debt at some point. If you tax the United States 100% of every dollar every American made, it still wouldn't be enough to pay the interest on the debt, much less the debt. So that's kind of what we're in, the situation that's going on now. So to get back to the original question, you have the US dollar is kind of the mother of all Ponzi schemes. It's a fraudulent, digital, non-existent paper. And then you have a stable coin, which references a US dollar, but it's not an actual US dollar. And it's backed by treasury bills in many cases, which are also non-existent. And then you have the CBDC, the central bank digital currency, which is actually an authoritarian, totalitarian instrument of surveillance. That is actually extremely troubling and should be avoided at all costs, but it's becoming quite big in Europe. It's becoming big in the United Kingdom, and of course it's already big in China. And it's the next step in this dystopian, centralized, globalist nightmare where people have lost all sense of individual sovereignty and are just enslaved by the debt pushers. They're
going to say, "Hey, you're spending too much money that has too big of a carbon footprint, and so we're not going to allow you to buy enough, any more gas this month." Is that something that could really happen?
Oh, it definitely can happen and is happening. The bottom line is that money will be rationed. So it doesn't really matter what your job is, because all jobs will be disintermediated out of existence with artificial intelligence anyway. So everyone will be awarded the state, and everyone will have to get their monthly ration of money from the state. And if you're a good person and you don't insult the state, you get a bigger slice of the fictitious paper money. If you're a bad person, then they starve you to death. So it's a way to run a debt plantation. It's because, Jimmy, over the past 30 years, the ability to do this, because the cost of the three primary costs of technology are storage, processing, and transmission over the internet, transportation, the distribution of the information. So all three components of technology are all crashing in price towards zero, right? The cost of storing digits and calculating digits and processing, it's all going down to zero. So the cost of creating this dystopian imprisoned state of centralized central bank digital currency has become within the reach of a bad actor, a state that is not interested in human rights. They just want to control their population. So that's why we're seeing this now, because the cost of doing it has become affordable for a state to run a dystopian central bank digital currency nightmare, as we're seeing unroll now. So, of course, they will continue to go down this path because it's profitable for them. And this is the trend that's happening. Well, in the United States, there's definitely going to be a bigger pushback than in anywhere else in the world. I mean, in Asia, there's already a fait accompli. In Europe, they're struggling now. They will probably fall to the European Central Bank. In the U.S., though, there is a genuine fight going on, and I'm hopeful that the U.S., particularly if they embrace Bitcoin, will put the end to the central bank digital currency nightmare. As the Christine Lagarde over in Europe has said, Bitcoin represents an escape hatch. Well, what does that mean? Because Bitcoin is not centralized, because Bitcoin is impossible to control, because Bitcoin is, you can't censor it. It's unconfiscatable. So it's the state's worst nightmare. And in the US now, everyone in Washington is talking about building a Bitcoin strategic reserve, hoarding Bitcoin. And El Salvador was really leading the world. We had the first strategic Bitcoin reserve. President Bukele is pursuing pro-Bitcoin policies. And this has really been the model for the world to follow. And Trump and President Bukele are good friends. I just read online that President Bukele will be visiting President Trump in Washington soon. So there's a very strong alliance there, and predicated on, in my view, a very strong understanding of what Bitcoin is and what the potential is, and who the bad guys are. The bad guys are the central money printers, the central banks. Those are the bad guys.
Institutional interest has lifted spot Bitcoin ETF assets into the hundreds of billions, controlling where large pools of capital can sit and trade. Stablecoins now represent a massive, tradable dollar surrogate with market caps well into the triple digits, creating on-ramps that funnel liquidity into Bitcoin. Meanwhile, corporate and institutional treasuries are stacking more BTC than ever, pushing long-term supply into illiquid hands. At the same time, central banks around the world are racing on CBDC pilots that will make privately issued digital dollars and surveillance rails more common, which only strengthens Bitcoin's edge as permissionless money. Put those forces together, and the most likely outcome is Bitcoin becoming the strongest money in the world. Could Bitcoin surprise everyone by breaking into seven figures sooner than predicted? Let me know in the comments if you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows. I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in. Don't pass up the chance to stay updated and make informed choices in the crypto market. Anyway, guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.